So is opportunity loss something that the value investor should be concerned about in selling?
As far as Buffett is concerned, his quality of money and the amount of money he has,
In Coke.
as well as per se, I mean, his float money which is there. I mean, if he makes that dividend yield of 3-4% on whatever he has invested in, of course he is not getting that peak price. I don't know what is the price now of the Coke and whether he has reached that particular high price or not. But I mean, his call was that he was sitting on the board of Coke. He was pretty happy with the quality of business and what is the future ahead. So he said, I mean, morally it is not right for him to sell, but we are not in those kind of moral obligation to not to sell or anything like that. If we ever feel that, like Infosys, I always thought that it is that kind of business. But I did sell. I made one of the largest money when I sold it in 2000 because the prices were crazy. I mean, at 100 P multiple, 200 P multiple, it never comes, those kind of opportunities. So it's not that you are married to a stock that you'll never kind of resign. I mean, but if you say that, okay, this 15 P multiple has gone to 17, 700 has gone to 1000, 15 has gone to 1900, should we look at selling? Those kind of things don't excite me.
Let me ask you one more question. I think it's a simple answer, but just so that everyone is on the same track. And this is what really differentiates, the smart guys from the guys who are less smart. When you make a mistake, what should you do? When you get your hypothesis wrong, let's say you buy something, you've done a lot of homework, and then it turns out you recognize after 6 months that, no, my assumptions don't hold up. I've got it wrong. Should you sell instantly?
Yeah, you book loss, clearly.
We agreed on this? Everyone here? Yeah. Is that a reason to sell?
Yeah, absolutely. Make a mistake? I think when you make a mistake, I think the first thing you have to do is to acknowledge it, and immediately I think you have to just kind of sell. That's the only way you can rectify.
So Ramesh is smiling. You're in agreement with this?
I said in my introduction, there are no mistakes in life. There are only lessons learned.
So when you learn your lesson, you should sell.
If you realize your mistake, you have no other choice.
Great. Ramesh, I'm going to ask you something which is very interesting. And we go around the table, but is short selling part of value investing? Is there a way that you can protect capital erosion? This is a serious question.
Yeah, no, it's a serious question, and I think so. I have a lot of respect for short sellers. It's a very tough business. You're always unpopular because, all promoters like you when you're buying the stock, not when you're selling the stock. The regulators don't like you when you're short selling the stock. I think they serve a very, very valuable function, and it keeps the market, the company, the promoters honest. So there are a lot of brilliant short sellers, Jim Chanos of recent variety, Jim Paulson, a 38-year-old medical student who called the CDS market top, Mike Drury. There's a great book which I'd recommend that you read called...
The Big Short.
The Big Short or The Greatest Trade Ever by Paul Zuckerman, which will tell you what happened in this crisis and how, the beauty of this business, that what really amazes me even after 20 years of this business is that you can sit in a room reading a couple of documents, a balance sheet, a 10Q, a registration statement, and figure out what's going to happen in the world and make a lot of money doing that. You don't really need a lot of capital, you don't need a lot of assistance. It's amazing, just the power of an idea, the power of a head can make you seriously rich in this business. But to come back to your question, I think it's a very fair technique.
Okay. Nilesh, you were very entertained when I said this. So do you think it's part of a value investor's toolkit, short selling?
Yeah, absolutely. I think there's nothing wrong with it, provided you're good at it. I think as long as you can actually identify and say that this particular security is mispriced or is significantly overvalued, and if you can spot that, there's nothing wrong in doing it. I think the problem in the Indian context always has been that you've really never had long-dated derivatives and things of that kind. So what could happen is that if you think that something is significantly overpriced or overvalued and you short it, but what you do is you just buy a 1 month option, etc. And you could again go seriously wrong. So unless the way you invest as a value investor with a long-term horizon of say 3 years, 5 years, 10 years, if you're able to take that call, then I think there's nothing wrong with it.
Raamdeo?
I don't have DNA to sell and go to sleep well.
No, so we're talking about short selling.
Yeah, sure. See, conceptually what you're saying is right. If you can...
Thank you. I appreciate that.
Like if something is selling 10 rupee thing is selling for 100, you go short very quickly. It goes up in 3 years, it comes down in 3 days. So it's very good for doing it, but you need to have that DNA. I think the short selling is a very different trick. First thing, I've not come across many guys who have made a lot of money and remained rich as a short seller.
No, I'm not saying it's a permanent short seller. My question is is short selling an important part of the repertoire of a value investor? I'm not saying that all you do in your life is short sell. I'm saying that there will be times in a career of 25, 30, 35 years when short selling is the way to be a sensible value investor. That's my question.
Yeah, but I think it's very tough one. I mean, I don't have DNA and I don't recommend anybody to kind of try it if he doesn't like to do it.
So conceptually this is right, but it's very tough to implement.
I'll just say the quote which you know better well, that the market can remain irrational longer than you can remain solvent. I mean, the losses you can make short selling is unlimited. I mean, you could have figured out in 99 the internet stocks were completely overvalued, but they got 3 times, 4 times more overvalued, okay? So it's a business that you please understand the risk before you do it, but it's a legitimate technique.
All right. So we're going to come to something else, and I'm certainly guilty of it. I'm not sure that all of you are, but it's something that affects value investing in a very sort of, what shall I say, a very powerful way. Because behind all these good thoughts that all of us have, in a sense we are like guinea pigs. Because we're always responding to events, to news flow, to quarterly results. So should value investors really be concerned about such things? Is it important to worry about, you own Pidilite. You bought it at a good price. A slightly dismal quarter because of foreign exchange losses, because something happened. So how important are these things? Because most of us obsess with looking at the quarterly result. There's news flow, they're spending 400 crores in a plant to make elastomers. So that's big. So suddenly the market moves 5% that day, up or down. So does that change value? What happens? I mean, is it necessary to react, or you just, go out for a matinee show, watch a good film, meet Ramesh Damani in the evening at the CCI and forget about it? How do you deal with noise as a value investor? Are quarterly results noise, and do you need to worry about things like this? Ramesh, you. Yes, start from that.
For the most part they are. You have to have a vision of a terminal value for the